let's look at the preparation of bank reconciliation statements. Bank reconciliation statement preparation can be dealt with from two perspectives, namely, A. Preparation of only the bank reconciliation statement, and B. Adjustment of the cash book and preparation of the bank reconciliation statement using the balance of the adjusted cash book. It's important to note at this point that whatever method we're using, be it the first method or the second method, that the answers must be equal. Also, it's important to also note that examiners prefer using the second method more than the first method, as this one is more complex in terms of adjusting the cash book and using the cash book to prepare your bank reconciliation statement. But generally, students should know both methods and how they can be applied in solving questions. So let's take the first method in preparation of bank reconciliation statement. So method A, preparation of only bank reconciliation statements. Under this method, only the reconciliation will be prepared. Only the reconciliation will be prepared. We can start with either the cash book balance or the bank statement balance. There will be no adjustment of the cash book. If the cash book balance is to be used, then unpresented checks, dividends will be added, while bank charges, standing orders, bank commission, etc. will be deducted to give us the balance as per bank statement. The pro forma bank reconciliation statement will be shown below. In other words, we can equally say that using method A, there are two ways we can go about getting our desired answer. We can either start with the cash book balance. So when we start with the cash book balance, end result will be our bank statement balance. Or we are going to start with our bank statement balance, and the end result as well here will be to get our balance as per cash book. That's cash book, CB. There are two ways to go about the method A, but it's important to know that using any of the two methods, we still arrive at the same answer. The two methods, if we use method A, the final answer we got there was 10,000 naira. Method B must also give us the same 10,000 naira for us to know that it's correct. If there is any discrepancy, we know that something is wrong somewhere. There was a mistake, so we have to cross-check. Both methods must arrive at the same answer. We have the formats for bank reconciliation statements using method A. This is bank reconciliation statement as at 31st December 20XX. So this is the heading for bank reconciliation statements, and this attracts a mark. Whenever we are preparing our bank reconciliation statement, it should be properly titled. This is the title. It should be properly titled because you are not preparing a trading account, you are not preparing a cash flow. Since you are addressing it to someone, it's only normal for you to title the account you have prepared. And for this is the standard acceptable format or title for preparing a bank reconciliation statement. It's titled Bank Reconciliation Statement as at 31st December 20XX. It's not compulsory that bank reconciliation statement must be made at the end of the year. Depending on the financial year of the business, that's what will determine the dates on which the bank reconciliation took place and the year in which it took place as well. This is balance as per cash book. This is when we are starting with cash book balance. When we start with cash book balance, the end result will be the bank statement balance. Our end result will be balance as per bank statement. So the first format we have on the board, we started with balance as per cash book. Since we started with balance as per cash book, as we have seen here, the end result will be balance as per bank statement. So they are one and the same thing. So when you decide to start with balance as per bank statement, your end result will be balance as per cash book. We said whenever you are starting with balance as per cash book, you add unpresented check, you add credit transfers, you add dividend. All the balance as per cash book will be on the second Naira column. So if you are dealing with any other currency, you signify here. So if you are dealing with pounds, you are going to signify here. Your balance as per cash book will be on the extreme column of your currency, and the items you are adding or subtracting will be on the first currency column. When we are working with balance as per cash book, we add unpresented check on the first Naira column, we add credit transfers, and we add dividend. We add undercasting of the receipt side of the cash book. So the total we are going to take to the extreme, which is the second column, the second currency column. And then we less uncredited check, bank charges, bank commission, standing order, dishonored checks, overcasting of the receipt side of the cash book, and we get the total. So the total we take to the extreme column, and on the extreme column we deduct it. We should note here as well that we put less. Whenever you see less, it means that you should deduct. When you are not told to deduct here, when the table or the format does not specifically need you to state if you are lessing or deducting, you should know that you should put a bracket here. So the bracket here signifies that you are deducting. So by the time we add up all the items that we are lessing, we are going to take them to the extreme column, and we are going to deduct it from the addition of your balance as per cash book and the total of all the things we are adding, our unpresented check, credit transfers, dividend, undercasting of the receipt side of the cash book. The total we are going to add to balance as per cash book, we are going to deduct the summations of all the items we are meant to deduct. So the answer we are going to get is going to be called balance as per bank statement. Before we move further to see the second format, let's recap a little bit. Let's go back to our analysis chart. Back in our analysis chart, we're given actions or the correction of some of the effects we analyzed. Back then, we're told that unpresented check, here we are dealing with balance as per cash book. So we're told that unpresented check we need to add back unpresented check to cash book, and we need to add back credit transfers to cash book, and dividend we need to add back to cash book. On the casting of the receipt side of the cash book, we need to add back to cash book. So that is the reason why we are adding all this to cash book, because we are dealing with cash balance as per cash book. So the balance you have as at that date on your cash book, these are all the items that caused disagreement between the cash book and the bank statement. So to correct that disagreement, we need to add back all these items to make the bank statement and the cash book to be at par. So that is why we are adding them. We saw earlier that when we're dealing with still cash book, we were told that uncredited checks were greater, so we had to subtract. The correction for bank charges was for us to subtract, because bank charges have not been reflected, so we have to subtract. So the same thing for bank commission. From analysis of the chart, we're told that we need to also subtract bank commission. Reason being that for bank charges, bank commission, standing orders, the bank have deducted or carried out these transactions on behalf of the bank without informing the company or without informing the firm. So as a result, the cash book is still having a greater balance even after these transactions have been carried out. For example, your cash book is showing 500 naira and your bank statement right now is showing 400 naira. For us to correct this abnormality, we need to subtract 100 naira, which is the amount for, let's say, for the bank charge of the bank commission, which the bank have carried out on behalf of the company. We need to subtract 100 naira from the cash book so that we can have 400 naira, which is the balance at the bank. so that the both sides will be at par. This is the reason why we are deducting. So this is the reason why we are also subtracting dishonored check. Overcasting of the receipt side of the cash book, we have to subtract it. Students are advised to go back to the analysis of the chart and see how they were analyzed, the effect and the correction required. It will make it easier in applying them into your format or into any questions you are exposed to. This is the format when we are starting with balance as per cash book. So let's see the balance as per, when we are starting with balance as per bank statement.